All right, we're live. And you know what's funny? I actually went live on my own personal channel, which barely has any subscribers at all. So I was like, man, we're 7 minutes in and there's nobody watching. What is going on? So hopefully we are now on the right channel. And basically, today I wanted to talk about the case for deferring your own compensation. So what does that mean exactly? So we'll wait for a couple people to actually come in. And I want to make sure that I'm actually on the right channel. So give me a second while I wait for the fact to see if we're actually on the right channel first and foremost. Okay, looks like we are on the right channel. So anyway, Dean, nice to see you. Manav, nice to see you as well. Good morning or good evening for you. So, okay, so what do I mean exactly? So I was actually watching, I was at the American football game. It was the Rams versus the Cowboys on Saturday, right? And then I was watching a coin toss. So they're deciding, who gets the ball in the first half, right? So the Cowboys flip a coin, and then they say, they call tails. And then what happens is the referee's like, which way do you want to receive the ball or do you want to defer? And the Cowboys say defer, right? And so when you make the case for deferring the ball, what you're basically trying to do is you're trying to kind of see what develops in the first half. You're trying to see what the story is in the first half, and then you get the ball in the second half, and then you can make a decision that way, right? Usually, they got this from the New England Patriots. The Patriots are, they're also one of the top 4 teams that are in the playoffs this year. Last year, they made it to the Super Bowl, which is the championship game. And basically what happened was, or over the last couple of years, over 10 years or so that I've been watching the Patriots, the coach Bill Belichick always defers the ball, right? And you think about that, like he's always patient. He always wants to see what happens in the first half, and he wants to defer. Now, when you think about your own compensation, for example, Justin, very nice to see you. Thank you again, Dean. And so you think about the case for deferring. Like when you make money in the beginning, like my parents used to tell me, my Asian parents, they used to be like, oh, you gotta save your money, But I never really understood that. It's like, you save your money and then what do you do with it? So to them, it was always like, you save your money, you save 10 or 20% or so, and you put it in like a stocks or bonds, or you put it in some real estate, right? You might get like a, 8 to 10% return or so, which is not bad, right? But the fact that you're watching this right now means that you are better than most people out there. You're gonna get a better than 8 to 10% return, right, in the long term, because you know what you're doing. You're investing in yourself. And Warren Buffett, one of the best investors in the world, said the best investment you can make in is what? Right? Type it in the comments if you guys think you know what it is. The best investment you can make in is what? And I'll give you like, maybe 10 seconds for that. For those of you that are in here right now, what do you think that best investment is? Manav, Dean, you guys have any thoughts? There you go, Dean. So you both got it, right? So Manav and Dean got it. The best investment you can make is yourself, because nobody can take that away from you at the end of the day, right? So, the thing is, as you continue to invest in yourself, maybe you start working for someone initially, or maybe you're making some money. What you got to do is you continue to reinvest in yourself, which is your business or in your career. In learning, you just keep getting better and better and better, because that's going to compound over time as well. And instead of, when you invest in stocks, I'm not saying don't invest in stocks, but when you invest in stocks, you're putting your money in under someone else's control. You don't have full control of that, but you have full control of yourself, right? And so when I look at the early days when I took over Single Grain, I constantly kept putting the money back into the company. Whatever money we got, I kept putting it back into the company. I really didn't take much for myself, right? Even nowadays, I just keep reinvesting in people, or making the company better, or learning for myself and making everything better, right? So you keep investing in yourself. And so, sure, that's fine. And when I look at my software company the last couple of years, and so Manav, the question was, what part of business do I invest most money in? It's in people. It's in people, right? That's by far the largest expense. Also, at the same time, I invest a lot of money in learning. Like last year, I spent over 6 figures on kind of learning and networking as well, right? It's all people. It's all relationships. It's all people. You got to be a great person yourself, and to be a great person yourself, you got to keep learning from podcasts, from books, from things like this as well, right? So going back to kind of what I was thinking about yesterday, I was like, man. I've been a business partner in another business for about 2 years or so, and then I went to use the restroom yesterday. We were meeting for a little bit, and then I came in and I sat down, and there's a $4,000 check sitting in front of me, right? And I was like, "What's this for?" He's like, "Oh, this is the last payment or whatever." And I was like, "Oh, okay, that's cool, right?" But I told this guy for the last couple of years, Damien, very nice to see you. Hello from Switzerland. Good evening to you. I told my partner, I was like, look, the last 2 years, I said, don't give me any of the money. Let's keep reinvesting. Let's hire more people. I don't need the money, right? Same thing for my software company last year, which has done over 6 figures so far. But like, I'm just constantly like, let's keep putting the money in other people. Like my co-founder needs a salary. There's people on the team that need a salary too. We need to pay contractors too. I don't need any money. I haven't taken a dime from it, and I've just constantly put in time and effort and money into that thing, right? So that's continue. I've been deferring the ball to the second half, seeing what develops, right? And that allows me to move a lot faster. When you keep reinvesting in yourself, especially in your 20s, going up to your 30s or so, and I'm not saying stop in your 30s, but you keep doing that, it compounds, and then you become this unstoppable force by the time you reach your 30s. And even if you're starting at 30s, you go up to your 40s, you're still going to be this unstoppable force, right? Manav asks, how do I pay my personal bills if you don't take your pay? Good question. So I only take enough to affect my personal expenses, right? I'm not saying my personal expenses are small by any means, but try to keep your personal expenses small. And that way you can go a long way, right? Because that's the thing that you can control. Now I will say too, like when you're straddling the line, for me, like I'm constantly reinvesting. I tell my team, like, we're not, because I have this long-term vision, because I have this vivid vision out there where we want to educate 40 million people on creating predictable business growth. That's a very ambitious goal, which means to get to that goal faster, I didn't raise any venture capital for the agency. We raised a little capital for the software company, but that's going to allow me to move a lot faster, right? And rely on myself, rely on my customers to prove that I actually know what I'm doing, right? So there's that. And then when I look at the marketing school podcast I've been doing with Neil, so some of you know that we're on track for 1.2 million downloads in a 30-day period. But even that, we have not monetized that at all. That podcast at those download numbers can make about $600,000 to $700,000 US dollars a year. We decided not to monetize it because we're going to keep deferring, see what develops in the audience. And now we're finding that because the podcast is called Marketing School, a lot of people want to learn more marketing. They want to get better at marketing. So we're starting this new training program around marketing. Like, we got the signal from it. We're doing that. Same thing with the Growth Everywhere podcast. I did it for 2-3 years or so before I even started to put any type of call to action to check out Single Grain, right? 2 to 3 years, barely getting any downloads at all. Same thing with kind of these, growing the YouTube channel right now. Like, we're growing slowly, but just defer, right? Over time. And so I think about all those examples, right? There's a blog that I'm part of. I told the guy not to give me any money. Same thing with the software company, don't give me any money. Same thing with the agency right now. It's not like I'm making a lot of it like covers my expenses, right? And then you hire great people and things move a lot faster. And you're gonna build something much bigger. The pie's gonna get a lot bigger, and then you can decide what you want to do later, right? And also, by the way, if you're constantly reinvesting in your business, you also have to understand that is a risk as well. Investing in yourself, investing in your business is a little more riskier. Investing in yourself, that's something nobody can really take away. But if you're investing in the business, the problem with that is if something like bad happens, you have to have a backup plan, right? So like, let's say the economy tanks, or you lose a bunch of big clients, whatever it is exactly, big customers, you have to have some kind of backup plan. You have to have some kind of if-then statements, right? Like, if this happens, maybe we need to save over here, right? But if something like really bad happens, like, we need to make these decisions over here, because that way you're going to be able to protect yourself, right? Because high risk, high reward, but you also have a backup plan. Damien asks, he says, on a daily basis, how many companies am I involved in? That's a very good question. And by the way, guys, I advocate focusing. So everything I do right now is around marketing, right? So mostly I'm involved with the marketing agency right now, but we're trying to we're trying to hire a CEO to kind of replace me in the day-to-day, and then I'll still be involved in kind of strategy. So there's that. And then the second thing is ClickFlow, so that's the software company, that's number 2. And then other than that, I create content for like things like this. The Marketing School podcast is every single day. And then you got the Growth Everywhere podcast. So those are kind of the main things. And then I got my book Leveling Up coming out, which we're gonna rebrand this to Leveling Up. Manav asks, how do you manage your finances when you're not big enough to hire a CFO? You don't need a CFO in the early days. You probably only really need a CFO probably when you're at, let's call it like going up to even 100 people or so. Other than that, you can just have your finance team, right? Your finance team can be, you have a tax attorney, okay? And then you have the bookkeeper as well, and then you have a CPA. That can be your finance team, and you meet with them like once a quarter. Obviously, your bookkeeper, you meet with them more. You have a cash flow forecast. Maybe we'll talk about this another time when I actually do a simulcast where I can actually share my screen. But yeah, actually to Manav's point, you got to be aware, like you have to be tracking your numbers very closely if you are going to be very aggressive, right? If you decide, I'm that good, I'm that damn good, I don't need to raise any money, and most companies shouldn't raise venture capital, by the way. You're gonna rely on how good you actually are, and you're gonna rely on you acquiring customers, you serving the customers, and you're gonna let that revenue do the talking, and then you're gonna use that revenue, and you're gonna reinvest it, and you're gonna go towards your goal. So what you gotta do, high level, you gotta, and I talked about this on this channel. Go ahead and search my channel, type in Vivid Vision, define your vivid vision first. And then if your vivid vision is just, I want to make a lot of money, then take the money for yourself. Go buy all the great things for yourself, right? But if you have a vivid vision that's like, way like grander and you're not going to raise any money, then you have to understand that you have to make some sacrifices. And you're going to have to make a lot of sacrifices because, you're watching this right now. It doesn't matter if you're a business owner, you're an entrepreneur, or if you're a marketer, you're making a lot of sacrifices. Like if you're going to go out there and you're going to do unrealistic things, you got to do unrealistic things to yourself. And you got to work with unrealistic people, right? Because that's what it's going to take to get there, like unrealistic people on your lead team, right? And then as you get bigger and bigger and bigger, then you have the realistic people, kind of the optimizers on your team that will stabilize the company. But if you have big goals, yeah, you got to be unreasonable, okay? Like that's what it takes. Now I've asked any book recommendations on managing a business. So the books I'll recommend is, this book over here, The Goal, is really good. We have all our managers read this. It's about the concept of the theory of constraints. It's really good. My book, Manav, is going to be on the concept of playing the game of life because I used to play a lot of games growing up. I also recommend reading Scaling Up. That's also a very good book, and also Traction. Those two books combined with this one are a pretty good start. And then maybe I'll do like another podcast another time with all my favorite books, or like favorite marketing books, favorite business books. Let me know what you guys think. But other than that, guys, like I'm trying to drive a point here. Like, guys, it's okay to defer your own compensation. It just depends on what your goals are, right? The author of this book is, let's see. It's Eli Goldratt. So it's ELIGOLDRATT. All right. So anyway, guys. Look, consider for yourself, is it okay, like, look at all your obligations right now. Is it okay to defer your own compensation? Like, cover your own expenses, like, that's fine. But, like, what else can you defer? Like, can you defer the house? Because you pay, like, in America, if you pay, $300,000 or $400,000 for a down payment, like, you're stuck with that house. If you had that $300,000 or $400,000 and you invest in yourself, you invest in a business, are you going to have a better return than that? Think about that. Like, that's the question I ask, a lot of people nowadays, right? And so what else can you defer? Can you defer the nice watch? Can you defer all these other extraneous expenses? Can you defer going out on the weekends and drinking, right? Like I used to like to do that in my early 20s or so, but like, the older I get, the more I realize like I want to have my Sundays back, right? So it's all your own personal philosophy. What do you think you can defer? And yeah, like Damien, you got to be confident in your capacity to defer everything. And you're going to grow a lot faster that way, and you're going to be a lot more comfortable too because you created your own growth at the end of the day. So guys, let me know what you thought about this. Let me know in the comments. And by the way, as always, we always talk about building that evergreen traffic machine. So if you want our playbook to building that evergreen traffic machine, you can always talk with my team. Just type in brand into the comments or type in brand into the chat, and we'll have our team reach out. With that being said, I hope you guys have a great Monday, and we'll see you later.